Howdy ho everyone and welcome aboard. It is the 11th of February, and this is Trading Buddies with one trading buddy at the moment. The other trading buddy, Ash, will be joining me very shortly. Well, in fact, in about 10 or 15 minutes, when he's up to speed with the news of the day and the late mail, which he'll bring us as always in the not too distant future, as I said. Let's get straight into the pound breakout trade, which apparently yesterday might have been okay. I don't know if you would have got a TP2, but certainly would have got a TP1 out of it, one would have thought, looking at the candles. I, of course, was not here. And if you were, you would have noticed that. But I think you had Ainsley on board and no doubt had a decent old discussion about gold and oil, among other things. Righto, what are we doing today? We've got... I don't know if we've got any new people in the room, but I'll very briefly describe what we're attempting to do here. We're attempting to trade the breakout of the final three bars prior to London session. In this case, it'll be the current bar, that bar there, and that bar there. Well, as you can see, the range is made up of the high and the low of that current bar. So we'll just be trading that bar, basically, with the breakout of that bar. The computerized version we'll be trading the breakout of the 5-bar range, and this bar here will come into calculations there. So the low will be entered 2 pips below that candle, and the short will be entered 2 pips below that candle, and the long will be entered 3 pips above that candle. What we do here for the test purposes is, as I said, we'll be trading that bar only. I'll be looking to enter at the top of that bar or the bottom of that bar, rounded up and down to the nearest whole number. So those numbers, I think I can safely set the long. 138.584 is the level of the high, so that will become 138.59. So that will be the buy price. 1.3859. The stop loss will be underneath that candle. I'm not sure we know that yet because it hasn't closed, but for the sake of the exercise, at the moment it's 1.38395, which becomes 1.3839. That is, as I said, subject to change based on where this candle actually finds its low, and that may not be where it is at the moment. So the sell, we can put the stop loss in for the sell because it'll be exactly the same as the entry for the buy, which is 1.3859. And at the moment, as I said, the entry will be at 1.3839. But I'll just leave my cursor there because that could change as I say. All right. I can't really place an order yet because I don't have the parameters, so we'll just wait upon that, shall we? All right, let me open the chat, see who's in and who's having a little chat to me. And of course, if you are in for the first time, g'day, John. How you doing, buddy? Hi, Sunfa. How you doing? Good to have you on board. I will have a very quick look because, and happy Chinese New Year to those of you who celebrate that. Let's hope you get to spend some time with your family and your loved ones over the festival, and you can hang around here with us because Ash and I think we're the only to show that. Well, maybe that's not the case. I'm sure Shook will be about as well. We will be business as usual, so we will be here today, as you know, and we will of course be here on Monday as well. Yes, Paul, hemp and bamboo. Amazing. We had a good meeting last night with the Tasmanian Hemp Association, and it shouldn't be too long before I get a marriage between hemp and bamboo, as in terms of building houses and things. Sounds like fun, right? Okay, so our low is now changed, so we'll have to wait and see what that is before we can put that entry in. 1.38, there it is. Or did it change? 1.3, won't tell me. Doesn't look like it has. 1.3838. What did I have? 39. So it has changed by 1 pip. Let's change that. 1.3838. And the stop loss remains the same. TP1, we work that out by taking half of the difference between the entry and the stop loss, which is 21. So that becomes 10. So the TP1 will be 138.28 or 138.28. And TP2 will be double the risk, which will be 42 pips. And that brings us in at 1.3796. Now, I better get that in the market before it actually triggers. Sell stop. Again, guys, please low risk, extremely low risk on this. We're talking micro pips, micro lot, sorry. Sell stop we've already done. The entry is at 1.3838. I might just make it. And the stop loss is 1.3859. Looks like I didn't make it. Oh dear. 3828. It's only got a few pips to go to TP1. We'll see. Obviously, I can't place that. I don't place limit orders, so I won't be placing that at all unless we get a retracement back above the candle. So nothing to do here at the moment. If it does come back above the candle, then I will place the order again. I will place the order, but if it doesn't, I won't. Why? That's just because that's the way I do things. It's MO. No, there's no concrete reason for it. It's just the way I like to do it. So if that goes to 1.3828, then I will null and void the order because that's TP1, right? We shall see. The computerized version, the entry for the computerized version would be, 2 under there would be 1.3829, which it hasn't reached yet. So that's 1 pip before our TP1. We'll see. We'll see exactly what happens here. This could be watching paint dry. Actually, it's been quite quiet Q-U-I-T-E, a quiet Q-U-I-E-T week, has it not? For many currencies, and I would suggest probably for equities, stocks, you name it. I don't think it's been a volatile week. Well, volatility and price movement go hand in hand, but volume, I think, has been a little bit down. You could understand that. And of course, John, yes, Japan and China are on holiday today. So look, I don't know that we won't get any movement today. The fact that they're on holiday might in fact have more people in front of the charts. I don't know. Retail traders anyway. Let's put it that way. I don't think the London desk would be anything but normal. So, we could well see some movement today. And after all, from the candles I've looked at, it seems as though we've had a pretty doji type of week to date. That may well change today. It may not. Okay, there's the 28 has not been hit, but very close. The short on the computerized version would have been triggered. But I'm inclined to think that we've missed the boat here. Well, I've missed the boat here. We'll see. I should update you guys. I took a couple of trades this morning. I'll quickly update you whilst we're waiting on this to do what it's going to do, if it's going to do what it's going to do. Go on, get there. Put us out of our misery. Amazing, isn't it, when you're waiting for 1 pip or half a pip, how long it takes to get there at times. Just amazing. In fact, if I'm waiting for a target, I don't. I just take it. What's the point? What is the point? Right, I've nearly had enough of this already. You can see I just don't like hanging around. It's either on or off for me. Come on. Okay, I'm going to get out of here, guys. I'm just not going to place the trade. I'll come back to it if it hasn't gone through 28. We'll think about it. But I'm not going to hang around here and just watch that's like paint drying. Okay, as I said, 2 orders placed this morning. Aussie dollar was one of them. And if you want to follow that trade, there are the parameters for that. Very unusual for me to do this. It's not my MO normally, but I did say on Tuesday, I think, certainly in my preview, I wasn't here yesterday my preview for yesterday, I wasn't here yesterday to vocalize it, but when I see a break like that, it's a decisive break, no question, and it's kind of a setup for me that I call the dominator. And I'm inclined to place an order above that bar and put my stop loss below it. I didn't actually do that yesterday, but and the reason I've done it today, and I've done exactly that today, is because we got that little bit of retracement, which to me gives us a little bit of insurance. Why? Because, well, if that candle means anything and the sellers are indeed coming back into the market, then they should drive price down, at least to the monthly pivot. And they didn't do that. Potentially on the back of low volume, no question. But my contention would be if they drove it back, the buyers drove it back, then really they're the mob that's in control. So I figured this could go further. And after all, it is a bit of a bull flag based on the previous trend. Certainly a uniform retracement, and that's what we like to trade. Like to trade them from down here, I must admit, rather than where I am. But I think this does have possibilities, and that's the trade if you want to follow it. Pretty much bang on entry or just a little bit below entry actually at the moment. The other one I traded this morning was Cad Swiss, I think. Sounds about right. Yeah, same really. I've been looking at this one since it formed on Tuesday, and generally what we're looking for when we come off the top of a range is price to come back into the range as it did here, with a lovely little formation known as 3 black crows. That's generally a sign that we've got further momentum to the downside. What I'm looking for in that situation is a lower high in here. So I like price to go back and retest a previous level is the best case scenario. That one there-ish would have been ideal. So price up to here, then you can look to short the market. But with these 3 black crows, we also got a break of the weekly pivot and a retest of the weekly pivot. And when we've got 2 decisive bars doing that, that's something that I call a double cross. And when I see a double cross in context, it's not, you don't just trade every double cross you see, but if it's in context, and this is pretty much in context because we're coming off the top of the range, then I think that provides us with an opportunity. So I've placed an order underneath that bar. I put my stop loss above the swing rather than above the candle and above this little high here. So there may well be another opportunity to get into this. And I would certainly think that if we did find what I originally was looking for, which was the lower high up here, then I would look to trade it from there, still short. So this is, I'll call it a just in case trade, but it's a trade or a setup that I trade all the time. So I don't have a problem with it at all. but would much prefer to see the entry up here, as I said. They're the parameters around which I have traded it, if you are so inclined to follow it. The only other trade I've entered this week thus far is dollar Sing short, and they are the parameters for that. And we, once again, we seem to be bang on entry on just about all of these. 1.32545, which is exactly where we are at the moment on dollar Sing. So if you wanted to follow them, then that is entirely up to you. The reason for this trade is a little bit different, but again, kind of out of context for me. I not out of context, but in the wrong position. I'd much rather trade short from a resistance level. But if you consider that this resistance trade line here has been broken and then retested right on the monthly pivot there, couple that with we've had a dominant break of the support trade line, a little bit of a close below the monthly pivot, that's enough for me to say if this is going, it should at least test the low. And if it doesn't do that, then I would be a little bit disappointed, certainly, but that happens, of course. We will take our profit before there if we actually get into it. This will depend. G'day, Ash.
Good, mate. G'day, mate. How are you?
Mate, I'm going okay. Firing all right.
Quietish day today. Yeah, well, I think a lack of drivers certainly this week.
Yeah, we kind of talked about that on Monday and said where are the movements going to come from?
Yeah, I mean it's kind of week two, kind of typical week two, isn't it, in the markets? Really, I'm seeing a bit of softness in the Ftse. I think there's probably a little grab with the Ftse if anybody wants a short-term trade. There is probably something here that can be taken, but generally speaking, it's all intraday stuff, really, from what I can see.
Missed the entry on the pound, and it has gone through TP1 already.
Ooh, yesterday was a good one as well.
Was it? Yeah, it looks okay.
Yeah.
I don't know if would you have got TP2 out of it. I don't know.
I don't know. I mean, I Brian was telling me that there was a take profit on the pound. So
20 pips of risk. You needed 40. No, you wouldn't have got TP2. So break even, mate, only, I'd say.
Yeah, well, maybe on the weekend we'll see if we can update this a little bit, have a look through it.
Although 10 pips, you'd still be in the trade.
Oh, that's good.
You wouldn't be out yet.
Oh, that's good. That's good.
Well, it's good if it goes long.
Yes, yeah. Well, it's interesting. I mean, the dollar should strengthen on levels for sure. CPI data.
I don't know.
The
stuck below this trend line. Both of them.
Yeah, little bit. Yeah, little bit. Yeah, it has. You're right. Yeah, it's just where are you at? Is that the dollar index?
Yes, on a daily chart.
Let me just have a look at my dollar index here.
It's bang underneath this confluence area, which is where I've been flagging it to be a tradable commodity, if you like. Of course, it's still not there. It's indecisive at the moment because it could still come back above it.
Yeah, it's interesting.
And if it does, then that changes things.
I've got dollar index futures, and actually the price is just above that trend line on the dollar index futures.
Just where, mate?
Just above the trend line. There's
on the daily chart.
Yeah, no. Actually, if you go to the hourly, to the hourly, there's an interesting one on the hourly.
Here. Oh, how do you drive this stupid flaming thing? Hourly down here.
Yeah. Is that right?
Why don't you show me your chart, mate?
Oh, no, sorry. It is on the daily. Yeah.
Show me your chart.
Okay. All right. I'll do that instead. Let me just set these up so they are nice and easy to see.
You got to be Picasso or somebody to drive this chart. Or maybe... No. There you go. There's mine. Okay, I've shown you mine.
Yeah. All right, let me do this. 4 share. Yeah, so if I haven't taken it from this low here, I've taken it from the from what would be the right shoulder. So that's what I get. Just a little bit of support along here, because
Okay.
this looks to me like a bit of a pattern, forming. I don't think it's I don't know. That'd be maybe stretching the friendship a little bit to call that more of a false breakout. Let's just see whether it's a broadening pattern. Yeah, it looks like a bit of a broadening pattern going on there. So from what I can see, we're at the bottom end of that pattern, and it looks okay to me.
There you go. We've got two
Let me
different
show you.
ways to look at it, as always.
Yeah, I'll show you the Ftse as well, because I think the Ftse is of interest for a trade to the upside. It's you definitely where are we at? What do I need here? Here we go. Yeah, Ftse I think is an upside trade. We are coming down to some shorter term timeframes here, but again, there's another little trend line along here that the Ftse is just about to stick to. So I think a decent risk to reward ratio here. Now I have I've got a trade on my other account, so decent price to get in at. You could put stops at this low, I think, relatively safely. So it's probably around about a 10 pip stop loss. And I think the aim would be to get up to the monthly pivot. Definitely some resistance in here, but it's just holding up, and it's a tricky one, because I don't think the Ftse is looking particularly bullish. Particularly when I look at the barometers. I've got most of the big companies around about flat. AstraZeneca up around about 2% off their new profit line, but everything else relatively flat. So looks like a choppy day, but because it's choppy, I suspect we're unlikely to break down. So I have put a trade on the long side, as I say, on the Ftse, and maybe people might just want to wait just to make sure this bar holds. If you want a bar to enter on, not a bad idea. It's only a 5-minute bar, but if this bar holds over the next 5 minutes, then I would have thought that's a pretty good trade. And as I say, aiming for the monthly pivot up here would be all I would do. That's around about 26 price currently. Yes, it'd be about a 2.5 to 1 trade if you chose to take this trade in this area. And waiting for the 5-minute chart, 5-minute bar to close, certainly never a bad idea, but you might lose the opportunity, because there's not a lot of room here to aim for. 26 pips to the upside, that's no more than 0.5%. So that's what I'm looking for, just a 0.5% rise to the upside there, and then if it gets there, take the trade off, in my opinion, or certainly take the majority of it off. Moving stops to break even, I think would be wise. I still think when I look at the Ftse that there's a chance that that we still get to the top of this shoulder, and that's not that far away. That wouldn't be that far away from the previous high. So somewhere around about the 95, that gives you about a 1% rise. Now, if you're aiming for 0.5%. With a 26 point move, taking the majority of it off and then aiming for the last 1% to get up, not a bad idea, but I don't think it's going to go too much higher than that. This particular pattern is looking very defined at this stage. Now it does depend on where this pattern is formed. Is it from here to here? And if it is, that's 14 bars, which puts us in another 2 days. So that looks like next week we might actually see the top of that right shoulder possibly form. Or is it from here to here? Is that the neckline, which is more like 36 bars, which means that we could be in this particular position right the way up until the first week in March. Definitely possible, but we do need to recognize that the Ftse will tend to weaken seasonally around about the end of February. So somewhere, to get some kind of signal in this area, I think would probably trigger quite a few shorts in the market. And it does depend, of course, on what trend lines that you're trusting. But look at that one as well. Now, if that was to take part, sorry, if that was to transpire, that's going to be around about 19 days. So probably about another week. So it looks like next week, if the Ftse starts to top out in this zone, then there might well be some safer trades to place to the downside. And that's the way that I'll probably be looking at it. I don't think there's much as to say. I think that any trades right now, probably better to say, let's go intraday and not aim for too much. Just to not overshoot, but aside from that, mate, I think it's going to be quite quiet. As I say, I've got barometers that are still being a little bit sticky. Unilever's down like 0.1% so far this morning, and that is the biggest stock in the Ftse. Royal Dutch Shell down 1%. So maybe that's about the only one. AstraZeneca, as I say, is up near 3%. So that's probably just managing to just to take away some of those Royal Dutch Shell losses, but looking tricky. So it's a bit of a coin flip. I would suggest at this stage, but I think that the monthly pivot looks okay. And one of the reasons I think one of the other reasons I think the monthly pivot looks okay to aim for is because of the right shoulder. You know, the right shoulder comes in at this high, so that would leave a margin of safety of around about 20 pips or so. So what's happened then? What did a 5 minute do? Yeah, it looks pretty good, doesn't it? You know, when you look at that 5 minute, that looks like a pretty good trade. So I think Ftse for a long looks pretty good to me. Might even initiate another one here. Let me just see what that would cost. Yeah, I can do it on this one here for you if you like, just so you can see. I'm in once, but let's go in again. Hit it again, and we will put the stops just down to about here. It doesn't look like a lot, very expensive. Actually, I can go in a couple more times here. 20. Let's go in another twice. And we'll put these down here. See how safe that is. So stop loss is currently down around about the 25 mark, so about 10 pips away from this. So looking for that daily pivot to kind of create some cover. Also got into a bit of gold yesterday, mate, but I have to say, gold.
How did you and Ainsley get on yesterday?
Well, you know what, it's a tricky one, isn't it? Because I really do believe in the gold space, but the CPI numbers, that the inflation numbers haven't been particularly healthy. So it's possible that the gold trade just becomes a bit of a nothing. Let's have a look at
long?
it. Yes, I have gone long. And where have I gone long? Oh, actually, it's just about to hit the second long there. So looks okay. Let me just bring this down here so I can watch this somewhere else. Yeah, it looks okay. Looks like it could go, but I like gold. This is more of a long-term thing. I didn't like the price. I've got to be honest. I didn't really like getting in where I got in, but I don't feel like there's too many choices. I mean, on the weekly, this price looks okay, and because it is a longer-term play that I'm trying to take here, then I was quite happy to trade that. But it wouldn't have been, you know, I do wish that I'd just had a bit more courage in my conviction and got in at the 1780 level. But I was really looking at 1770 and below. So I suppose I stuck to the plan to a degree, but $15 away from where we were, and there was this little support line here. So really should have got in there. But you know, as it's popped up now, I'm willing to risk the fact that that it's a little bit higher. But as I say, it's far enough because of the weekly chart. It's at the low end of the zone on the weekly chart, so it isn't a buy zone in my opinion on a longer term play. So I'm going to start to build in a position with gold. Now this is going to be a different play than what I will do on the ATW accounts, because I will and I have put the stop in place on this one. But on my own account, I haven't. And what I'll probably do is just deleverage the thing, and just see if I can build a position. And I always talk about this because there really is two ways that you can approach any market. And Paul and I will be talking about this a bit more later on. But one is with leverage, and that's the benefit of trading softwares and trading brokers and stuff like that. But the other one is to have no leverage and just use the money that you have. And I do tend to approach things in both ways, depending on whether I'm looking at a longer term trade or whether I'm looking at something a little bit more short term. So with gold, I think that there is a longer term play to be had here. And even though it's a buy zone on the weekly, but if you look at it on the daily, it looks like it could be a little bit weak. I don't mind if it breaks down a little bit, because I will probably just push back into it around about here. And everybody knows how I feel about not having gold in the portfolio when you've got cryptos. I think if you've got cryptos, gold's really a must. I think you've got to have it in there as well, in my opinion, just to kind of balance things out a little bit. Now that doesn't undo some of the amazing gains that people have had in cryptos. But I think if you've had gains in cryptos, it's better to kind of maybe shut yourself down a little bit and go, okay, how can I now protect the money that I've got, and how can I start to just push it out a little bit. And I think back to a friend of mine who was trading the euro really successfully. I think he turned £3,000 into £100,000
Wow.
and it was in the period of 18 months. So it was a very, very short period of time. But it was some of the, I saw some of the points where he was making this money, and he was sweating, but he never protected the money. And when he got caught in a spiral of downward movement, which happened with Bitcoin, and many of these cryptocurrencies a few years ago, when people got caught in the downward spiral, they didn't really have the foresight to say, okay, let's either close the trade or stop trading or whatever. They kept doing what they were doing previously, which is effectively buying the dip. Constantly doubling down and buying the dip, which is what he was doing with the euro. But when it went wrong, it went badly wrong, and he lost it all. He started with 100,000 and literally ended up with minus that.
Oh no.
Yeah, it was
Oh
terrible.
dear,
But
oh dear.
he had no experience. But a friend of his was kind of advising him through the process. And for 18 months they were just doing brilliantly, because there was a particular thing that was happening to the euro where it would just go in this
they got lucky, in other words.
They got lucky. They picked the right phase, but when the phase changed, they didn't change with it. And this is why I think that if you've got a decent pool of cash that you've made from any instrument, then you can start going, okay, now how can I leave that cash safe and put it into some kind of fixed assets, if you like, whether you buy a property or whether you buy some gold or whether you buy some stocks, whatever it is. Now I know that always seems really hairy, but if you look at, and this is why it almost doesn't matter to a degree where you buy gold. Now, Bitcoin might be the same in the longer term, but it's still unproven historically. But let me just show you very, very quickly, if I've got it here. Let me just, I'll tell you what, I'm on the wrong thing there. Let me bring this up. There we go. No, what do I want? No, I want this, sorry. Here we go. Here we go. So if you look at this chart here on gold, and what we see is a chart that goes back to the 1970s, and it just rises. I mean, yes, you do get these big moves to the downside, and that's going to be quite hairy, but That lasted about 4 years. So you'd be holding on for 4 years before it starts to pick back up again. But the point is that gold is an asset class that goes up. So if you're trading if you're owning and trading many things, then gold's relatively safe. You know at some point it's probably going to get back to your area, because of what it's been doing for the last 50 years, and that's just since it's been charted, really, because obviously the kind of price of gold has always risen. So this is why I think it's quite important just to kind of hedge your bets a little bit. I don't like the current numbers. That's the one big issue, mate. That when it comes down to what's happened recently with CPI, this area may be wrong. And I'm happy to say that okay, I might be wrong, and I'll come out of the trade. I've put my stop loss in at this area, so I'll come out of that if necessary. Let's just quickly flip back to the Ftse as we see that one pick up. Okay, let's see what we got here.
I'm pretty much the same opinion with my trades that I've entered. I'm quite willing to get out of them if they look like going the other way. Quite willing.
Yeah, it's and I do think that it is going to depend on what your time well, I can't think of the word, but how long you're willing to wait, really, for this stuff to kind of take off. And I'll be happy to hold gold right the way through. In the same way that if I have got some cryptocurrencies, but I haven't got Bitcoin. And if I had bought Bitcoin, then I'd just be leaving it. I wouldn't be doing anything with it. It's one of those things with gold that I'm really looking just to buy it, leave it, and just have it run in the background while the other things do what they do. Sort of, because I think that there's certain markets that you can trade in and out of, and there's other ones that you just you can effectively invest in. And I think splitting your trading approach into investing or trading is quite a decent. It's a good differentiation to make. I know some of the guys in the room. Actually, if anybody wants to come on mic in the room, please do, or stick your hand up, and we'll give you powers to do that. But I think if anybody was in Gordon Scott's session, then he was discussing kind of like the different approaches to trading and what kind of characters we are. And I think you could almost do both. I think you could actually sort of say, I'm going to use these instrument classes for this approach in very similar way that you've started to do, mate, where you've almost started to go, I've got a slingshot on a weekly. And I've got a slingshot on a 30-minute. You've almost got kind of two different approaches, and I think that's really healthy as you kind of progress as a trader to do that and start to look at how you can stay in things a little bit longer. I
think you just feel it as you do go that, and circumstances change in terms of your daily life, etc. But I think you learn that there are certain things, certain currency pairs that you can trade. And as you know, I'm just a currency trader, but there are definitely certain pairs that you can trade on a 30-minute chart that you can't, there are certain things you can trade on a daily chart or a 4-hourly chart that you really can't trust on a 30-minute chart because they're too flexible, I'll put it that way, or too volatile in a controlled environment or a short time frame. But far more reliable on a daily or weekly basis, or even monthly basis.
Absolutely. I mean, and it's a bit like if we've got an overall view of the Aussie, really, you'd probably want. So if you've got an overview of something, you want to try and get in on longer term time frames. Whereas if you've if you're kind of like trading in and out of these things, then they do become a little bit trickier. And trading in and out really is about volatility, and that's some of the problem really with this Ftse trade. I mean, I've kind of taken a trade to get to the monthly pivot, but there's just no volatility. I mean, you look at the VIX here. Bring you the VIX. Look at the VIX.
There's probably going to be very little volume today as well. After
absolutely, yeah, absolutely. But look at that. It's just nothing. There's nothing going on, and with that lack of volatility,
there's no market yet.
Yeah, it makes intraday trading that little bit harder. And what might happen with this trade is it might come out, stop it out, and then go to the monthly pivot. But just because there's no volatility, you really want to get a reaction when you're intraday trading pretty much straight away. And we're 35 minutes into the market. The market opened up. Where was it? 10 here. That's the opening, and this is where we are. We're up 2 pips from the open in the Ftse 100. So volatility is non-existent. So I'm not sure. Whether I won't be interested if this is here in the next 2 hours. I'll be getting out of it. I do want a reaction really in the next 25 minutes really. But yeah, that's all I have, mate. I don't really have too much else. This most of the stuff that I've got on it are longer term plays. I've got some shares that I've bought up and that I'm sticking with. Actually, John, one for you, mate. I don't know whether you're able to trade UK stocks, but there's a little stock called 7 Digital Group, which is a music P2P platform. Now, I don't know really, what's going to happen with them, but have you heard of Triller, Jeff? You probably wouldn't have done because I've only heard of them because of the connection with these guys.
I might have had a girlfriend once named Triller.
No, that was Thriller.
Triller.
Triller is a website where you can make your own music videos. People make their own music videos, and there's quite a few people that do so. It's trying to take on. Oh, it's John. Let's get him to unmute.
Just before you do, I'm going to place an order, mate.
Okay, all right. Stick with us, John.
Yep, no problem.
I'll be back in a flash. I mean, I'll be done in a flash.
Okay, all right.
This is just a little quickie, guys. And it's in and out one. We've got euro dollar on a 30-minute chart, and we're going to trade above this bar here. Oh, actually, no, we're not. My apologies. I'll be trading straight into the high of the day. Cancel that. I knew there was a reason why I hadn't done that earlier. Okay, I'll give you the setup anyway. The setup is, and Ash, if you have a look at your weekly Ftse chart, you're going to see a lot of these on that chart. If you take note of what you've got here, you've got, well, this is the start, but you've got up, big back, up, big back, up, yep, big back. You've got exactly that on your weekly chart. What I call those are shots over the bow. It's telling me that this is going that way at some stage, but I have a rule that says I cannot trade into the high of the day without profit in the bank, and I haven't got room for that here. So if I miss it, I miss it. That's just the way it is. I may get a better opportunity a bit later, but I like this because it's showing me a clear false break, retest of that false break area. And as I said, shot over the bow, shot over the bow, shot over the bow. If it does go back to here, I reckon there's going to be acceleration through here, and it's going to pick up some energy as it goes. So sorry, I did overlook that fact, and I won't be taking that trade based on trading into the high of the day. I just don't do it.
Okay, mate, no problem.
Take it away.
Yeah, so Triller is a website that makes music videos, and you can basically take somebody's song, so Eminem or Rihanna or whoever, and make your own video. Frank Sinatra, exactly. Who's that guy that did that really good song? There was an old town
out in the west. Oh, hang on. We'll get into trouble.
Yeah. Oh, yeah. Sorry.
Marty Robbins.
Marty Robbins. Yeah, you can take some Marty Robbins, but then you make your own video. So, it's meant to be rivaling TikTok. Now, okay. Universal have just pulled their whole catalog from Triller because they're not paying, their way somewhere along the line. They're just not paying the money. So they pulled their catalog, but 7 Digital are still supplying Triller with it. Now 7 Digital did go down in price after Universal pulled their catalog, but generally speaking, it's a penny stock, if you like. It's what's the price of it? It's at where are you? 7 Digital 1p, or is it 15? No, it's 1.5p, 1.5 pence it is for for 7 Digital Group. So yeah, I thought that was quite an
Is
interesting
that
one.
actually a thing still? Is it 1.5 pence?
Yeah.
Yeah.
Can you actually physically have 1.5 pence?
No.
No.
Right.
No.
Okay.
Yeah. I mean, to be exactly to be precise, it's 1.575 pence. So even less likely to get that.
Yeah, I would have thought so.
But yeah, John, what was your point, mate?
No, I was just going what you say. Look, having two different ways of looking at things. In the morning, I go through looking for inside bars like Jeff's taught me. I look for them. I go, okay, there's a little bunch there. And then I go through my wave rider charts. I go, oh, that's interesting. And then I pick my wits against Paul Hutton. I pick something, and then I try and guess what he picks. So I do this like an hour before everything starts. So the idea is not to make money. It's the idea is to see if I'm close to what you've suggested and what he suggested, and then I look at it, and then I'm feeling quite good today because we didn't get triggered into pound Aussie. It's gone the other way, but I'm looking at it because I didn't place the order because I had a look at what had gone on during the week, and I thought, oh, that's where all the money is. I'm not going to place that because I think that's going to come back. It doesn't always work like that.
Yeah.
But like you said, I have two different ways of looking at it. Eventually I'll make money, but that's the point at the minute, is not to lose it.
Yeah.
And to, like Jeff said to me, he said, look where the money is. So when Jeff didn't place that order then on the 30-minute chart, I went, all right, now I can see why he's not placing it.
Yeah.
Before I had no clue.
That's a really interesting point, mate. Because actually, the first job as a trader is how do you not lose, as you say. That really should be the first thing that everybody absorbs, is how can I protect my capital, which is why I'm talking about getting into certain assets that might do that. How can I protect my capital? And then after that, then you're looking to kind of see if you can turn that edge that effectively helps you break even into a 1% gain, and then a 2% gain, and a 3% gain, over the course of the longer period. But I think that's a really poignant point that you're making, is that that it is about how do I protect and how do I not lose. And if I can look at trades and say, okay, there's a little bit of there's a red flag in there. There's enough of a problem in there for me not to get involved. Then you do just avoid not only a lot of losses, but quite a lot of emotional hardship as well.
Any of that.
Yeah, well, this is the thing. I mean, nobody likes to miss trades, I've
learned to take not the hit as in with the loss. But I've learned to take the hit if I miss a trade.
Yeah,
I hate it, but I think this is where it is. The market's always there tomorrow. Leave it alone and jog on, because it's just going to make it worse. So when you guys had your trading retreat, apart from the bit that I joined, I did my own. I thought, right. I have my own trading retreat. You're on your own. Can you survive the week without any foul ups? And it was okay. I learned a lot about just watching these trades go by if you miss them. But I do I took two things, like what Jeff does and then with what Paul does. But I also took something from you way back last year. I can't remember how you put it. It was quite good, actually. It was like a verbal slap that you were giving everybody. Basically, what you said is that if you can't get out of bed at least 40 minutes to 45 minutes before the wave rider kicks in, you didn't quite say you're in the wrong business, but more or less that you that you went doing your own analysis before somebody gave you the trades. And I suppose this is my last little bit, and I hope you agree with it, because I thought, hang on, okay, somebody's saying trade this, somebody's saying trade that, somebody's saying trade this. I'm not learning to trade. I'm just taking somebody else's trade. So if I don't get out of bed and do some of my own analysis, I'm not learning. So thank you very much. I've not made any of it yet, gentlemen.
I'm glad. I'm glad that had some kind of impact. But I feel like I might be a bit rude. It sounds a bit aggressive for me.
No, it's like that cartoon. You know, the cartoon where they just get you and give you a slap.
Yeah.
It is like that. I thought, okay, guys, yeah, I get it. But there you go. So,
oh, fair enough, mate. Okay.
Tough love, mate. Tough love.
Tough love. Yeah. I mean, I suppose. Yeah. Every now and again, I get.
Gordon Scott was very good. I thought he was a good teacher. I hadn't got a clue to start off with.
Yeah.
But I'll trundle along.
Yeah, no, he was brilliant, wasn't he? I mean, I really like his outlook. I thought his outlook was fascinating, as much as anything else. I thought it was very, very, it's really, really interesting. And as you say, the way he kind of looks at it. Do you know the most interesting thing I thought about Gordon was his commitment to finding mathematical patterns. That was the thing that I really took from him. Is just that he's really intrigued by finding these mathematical patterns that exist in the market, and then utilizing them to trade with. Which as I say, I think that's such a brilliant approach.
It took me a while to get over that one. I had to go and have a big glass of wine to let it unravel in my head.
Yeah.
But again, you see, the other thing, it's just general really, is that I've got all these like circles on a piece of paper. There's Ash over here, there's Jeff there, and there's a number of years you've been doing it. There's a number of years Jeff's been doing it, and then Paul the boss, and everybody's been doing this for a long time. So I'm there in my little circle, brand new to all of this, and then next to it, he goes, what gives me the right to think that I'm as good as these people? Because they've been doing it for so long. Get in line, learn, and then progressively you'll work up the information that they're giving you. And this is a bit weird because sometimes I don't get it. I really don't get it. When I did the slingshot for the first time, I'm giving it, what is this?
Oh, I still don't get it.
But I'll be honest with Jeff, it's only now that I get it.
You're starting to get
only now that I start to get it. Do I have any confidence that I've got it down? No way. But it's been a learning curve. I mean,
what's your favourite strategy, John?
My favourite strategy is to be fair, I don't have one.
Okay.
I equally like the Wave Rider in the morning because it shows me. I do that. I put a volume thing underneath. The volume, so it just tells me whether the volume of each candle, so I can sort of see if they're lying or not.
Oh yeah.
People call it manipulation, but I don't call it that. They've got to make their money. That's what they do, and it's their profession. So I do that, and I go through and I put my 3 charts up. But the one I have got the quickest, I have to say, is the step.
Oh yeah.
I got that. I used that to help me understand the Wave Rider, and then I used that to help me understand the slingshot.
Yeah.
I follow religiously. Not that I always trade it. I follow pound US dollar, pound Aussie dollar, and gold and Ftse 100. I follow those every day. I don't actually trade them all the time, just so I can see the movement in the 3 sessions per day.
Yeah. Sorry, Jeff.
I'm going to go back to a point you made, John, and you were talking about. Ash asked you, I think, which was your favourite strategy, and you were talking about myself, Ash, Paul B, Paul H, Gordon, and I think they were the only 5 mentioned, but I'm sure there are more. Isn't it amazing? I guess through those traders, there would be there'd be 100 years of experience in there almost, right?
Oh yes.
Yet each individual trades the market in a completely different way.
Oh, I mean, my degree is educational psychology, apart from music, and I find it fascinating. I mean, this is just me, and I'll finish them. I don't mind paying for the information. Does it make sense? Because the first thing I tapped into, I'm giving it hang on. There's an information minefield here of actual experience, and that's one of my bones of contention in education. There's plenty of people who are trained as teachers, but no experience of what's going on for real. Whereas you guys are all doing it for real, and you don't mind being teachers, and that's the key. And I thought, okay, just sit back here and you can learn. Now, whether I'll be mega successful at this, I think I'll be okay. I don't think I'm going to make a fortune, but you never know. But you can certainly learn.
Thing is, John, I mean, if you're in an industry, and this is the one thing about people that step into this this profession without having any cover of a job. If you're in an industry where you've got a job, I think one of the best things to learn about the financial markets, depending on whether you want to do strategy or approach or money management, whatever it is. But the best thing to take, I think, from all this stuff is that if with the money that you earn, you can tuck it away somewhere just to do something in the background, then it's about comfort, isn't it? It's about, we don't have to hit the leather off the ball and become really wealthy. Many people will, and I think that's a great approach as well. But it's not really, I don't think it's the necessary takeaway. I think the necessary takeaway is that there's not enough financial education in our system, in the education system. But what we can do is teach ourselves this stuff and take advantage of this stuff, because by making sure we protect our income and making sure that we understand the difference between currency and money, and making sure that we are actually making money and not currency, if you like.
Totally agree.
Because all we're doing as a job is making currency, right? And that currency just devalues and devalues and devalues. But what this is about is saying, how can I turn that currency into money which doesn't devalue, which stays as my money? So I've got, this is what I actually own, and I don't want to go below that threshold, because what's happening and what will happen over time is that we will get poorer and poorer and poorer because of, relatively speaking, that is because of the system. But one way that we can take part in the system, like all the people that have got millions and billions of dollars or pounds, is that we can say, okay, we understand how now to protect our wealth. And I think that's a really good takeaway. So I think it's great, mate, that you're taking part in this stuff with the right attitude and not sort of like thinking it's about hitting the ball out the park, because it really isn't. It's just not necessary.
You learn as you're going along. I took a punt one night. It was pouring down with rain. I thought, okay, I'll go to this event at this hotel. Let's go see what's going on. Best decision I ever made.
Yeah, that's really cool, mate.
Picking up a saxophone was the other one, and obviously getting married.
yeah.
Which is.
Well, sometimes that's okay.
Hey, she did okay. She made a little bit of money on crypto without doing anything. She just left.
Oh, mate, that's amazing.
And it's 100 turned into 1,000. It's in ringgits, but so that was quite nice.
That's very good. Nice. Yeah, that's very good. Okay, just very, very quickly back to this Ftse trade. Sorry, mate. I don't know. Is anybody else got a hand up?
That's mine.
It's yours. Fine. Okay, mate.
Thank you, Fred. Our pleasure, mate. Our pleasure.
And Jeff has been instrumental. Oh, thank you, Fad. Yeah, that is really cool, mate. What I would like to do is make sure.
And you like the new look, Fed, right? Fed likes the new look, I think.
Oh, what your haircut?
Jumped on. Jumped under the mower on Monday or Tuesday.
You're getting a bit offended that we didn't comment on it. Here we go.
No, Fad did.
Right, here we go. Ftse 100 is here now. I'm about 3 pips away here. So what I'm not going to do is, whoops. Oh, I'm so close to this. Now I've moved it slightly below the monthly pivot. Now it probably will get there. It's looking quite keen, isn't it, at this stage? Should we watch it and see if it does it, or should we just start to close these off? Around about 3 pips away. I mean, it was If we say aggregate of it is about there.
3. How many did you risk?
10.
How many are you up?
20. Oh, what are we up?
Then there's no question for me. You just close
23.
the bloody thing.
23. Oh, we're only 2 pips away now. There's only 1 pip away now. Go on, get up there. Get up there.
Go on. Right, kick it in the ass. Get up.
Tell you what, I'm not bothered about those. Oh, go on then. It might do it on its own.
Get out of there.
Yeah, it's close enough, mate.
Nice.
All good.
Well done.
Okay. All right, so we've got a little 2.5 to 1. And look at that. Look at that timing, Jeff.
Perfect.
Come on down. Come on down.
you watch
Make
your
me look good.
Make
me look good.
That's good enough. That's good enough for me.
What's that, buddy?
That's good enough for me.
Yeah. Were you in that?
No, I just followed it. I didn't have the nerve. Ftse 100 scares the life out of me. I don't know enough about it.
Oh, mate, do you know what? It is a bit. I think it is a bit like that. The Ftse. It can be a real dog at times, but yeah, it's one of those that
you need an understanding of that. I'm sure you know.
Yeah,
you really do.
Yeah. You get them. You get. And the thing is, you don't have to get that many right. That's what I quite like about the Ftse. You know, if you're always aiming for 2.5 to 1 or something, then you don't have to get too many right, and it's all okay.
I just
okay.
How did you not know? How did you analyze to go in at that point? And obviously, I can see why you took the profit, but where you went in for that long. How did you not know? But how did you analyze it to go in there?
That's a really good question. So the first thing I'm doing is I'm trading the open. So in a way, the good thing about going in at 8 o'clock, and I really like the open trade, is that you've got a 50-50 chance of being right at a specific point in time. And you know that's where there will be some market action. So you should get a result relatively quickly at 8 o'clock if you got any kind of market. So then I'm looking at where is the price action at this particular point in time. So I'm not interested in any of these times, but I am interested in what's happened really throughout the Asian session, which is what this is all telling me. Let's bring it on to a 15 instead. This is telling me, what's happened through this was yesterday.
Are we seeing your chart? I can't see your chart.
You guys not seeing my chart?
I'm not. No.
Oh, there we go. There we go. So in that case, you wouldn't have. Yeah, okay, doesn't matter. So the first thing I'm doing is I'm saying, where is it going? Sort of generally speaking, what's the big picture? And the big picture, I look at this and I say, I still think that there's a chance it gets up to this. So I'm starting on the dailies and I'm just having a look and saying, what's happening with the Ftse? So I'm saying, okay, well, the likelihood is it's still probably going to get up to this point. Now, it's had a chance to break down the last few days, but it hasn't broken down. Now, when I look at then I look at the intraday stuff, and I'm thinking, well, what happened during Asia? What's the general mood music? And the mood music was that we were in an uptrend. I'm not interested in indicators or anything like that. I'm just looking at the general price. And then it's really just about where's the obvious place it's going to hold, and the pivot is brilliant. But Jeff has really enlightened me on pivot trading, and I love it. It's really cool. And what I also saw was this area was tested and rejected. So I got in a little bit early, but when I was saying to you guys to get in was during this bar here, when the price had already tested this, bounced away, it was closed above the pivot, and then it started to kind of like show that there was some support there. So and this is an obvious area to pick for the downside, because that's the resistance, that's an obvious resistance point, and it's another pivot. So really we can kind of we can magnify it down to saying let's just have a look at where the pivots are and try and trade around the pivots, because they do react really well. We can see it here, it bounced away from the pivot, came up, didn't quite test it. It did test it there and it rejected it. So the pivots are really useful on a day-to-day basis.
Intraday,
and then
absolutely.
Intraday basis. And then so it's really just going, which direction is it going to go in? Is it going to fall below the pivot and get down to this one, let's say, or down to this low somewhere, or is it going to go up? And that's when I can start looking at barometers. So I'll bring in this. So I've got this in the background. And this is so this is the stuff that people won't tell you. They'll say it's all about the chart. It's not all about the chart. I want just a little bit more information. And what I've got here is the top 20 that I can see. I don't need to look at the whole Ftse 100. I just need to know the companies with the biggest market cap, and you can see the market cap here, 160 million here. For Unilever, and so this is telling me it might be 160 billion actually, but this is telling me what's going on with the big guns, because if the big guns aren't breaking down, the FTSE is not likely to break down. Now this doesn't tell us a lot, but you can see that most of it's green, and anything that's red is very, very small, and it was looking like that this morning. So it didn't look to me like a move to the downside. And considering what the Asian session did, and where we were in the chart, and one other aspect is that markets tend to go up, things are then in my favor to say, let's have a punt and see if we can get higher here. Now, the only other question is where, are we likely to get stopped out before it goes? Well, it tested it once, so it kind of decreases the chance of getting stopped out. So that's how I trade the FTSE, is to try and just trade the open. I mean, obviously, I've still got this position on the FTSE from all the way down here. Still got that position in. Wow. From wherever we got. Where was that? That was in November. I've still got that position in. But what I can also do is just trade it intraday, and that's the way, really, the best way to trade the FTSE intraday, is to try and sort of assess. And it's always easier to go higher. So if you want to start trading the FTSE with a bit of success, the best thing to do is just trade it long. And I'm talking intraday. Just look to see, is there a trade long that I can get into? Because it's much harder to short equities than it is to go long on them. So is there a trade long? Is there enough information to say it's going to go long here? Well, there's a little intraday trend to the upside. There's no news or data to suggest this is coming down. Barometers are suggesting that it's not breaking down. I've got some support here, and then, give it a go for the long side. And that's all I'm doing. All I'm doing is giving it a go. So I don't know it's going to go higher, but I'm going to give it a go that it probably, that it could. So that's my thought process, mate. And as I say, the first port of call is to just look for upside. The downside is really, the only time I'll go downside now on the FTSE is on my other account, because I've got a long. So I'm hedging out the risk if it doesn't go short. And I'll fix it up later.
You've got to go, but there's a quick question from Fad there.
Ah, okay. Sorry, I missed the question. Where are we at?
Can you say the same for the S&P and the Dow?
Yes, you absolutely can. So with the S&P and the Dow, again, what you want is to put in the top shares. Just have a look at the top shares really in the US, and just again look at the market cap, just to get the ones with the biggest market cap at the top of the list, and just see what color they are. If they're all green, you're good to buy. You are just good to buy, because you're looking sort of under the hood, and then it's just about trying to pick a level. But yes, Fad, absolutely, you can say the same about the S&P and the Dow. You can say it the same about any equities, maybe next week I'll show you just a few, but you can do it yourself. Just bring up any equity. Look at the IBEX, the CAC. Look at the Aussie 200, and all of them over the last 50 years would have been going up. So that the draw is to go upside. The equities tend to go higher. So that the direction of travel is in your favor if you just look for longs when you trade intraday. And you could probably say the same about equities, Fad, as well. Have a look at, sorry, not equities, currencies. Have a look at currencies over the last 50 years and see which direction they tend to go in, and you'll know which way you should try and look for those ones intraday. Aussie yen comes to mind straight away as the proxy for the market. It probably, looking at the Aussie yen over a 50-year period, there's not enough data on here, but you look at it over a 50-year period, and you can have a look at Yahoo Finance or investing.com, and they will probably give you much longer term charts than this will. But
Yeah, well, you know, I've heard that there was a lot of talk about that in Gordon's chat, right?
Yes.
I mean, this is so obvious, and I've got no idea what he said. It's so obvious that this is a proxy for the market because it's a proxy for market sentiment.
Yes.
Aussie's risk off. Aussie's risk on, yen's risk off.
Yes, absolutely.
What more do you need to know?
Yeah, absolutely. And I suppose, you know, given that, you could, where are we at? We're an hour in, which well, maybe not. I was going to say maybe you could trade this instead of the Ftse, but actually you can't because this hasn't really moved. It's more of a general thing, I think. But you'll probably find, you know, markets that you know, and really when you're looking at this stuff, you have a look on the monthly. Where's the trend on the monthly? And really, if you want to be safer, try and trade intraday with the longer term time frame, and you will have a higher probability of winning because these trends go on for the longest time. So if you're looking at intraday markets, then try and put yourself on the right side when you're starting out. I don't mean if you're a bit more experienced, but when you're starting out, just try and get on the same side as the monthly trend, and I think you'll have a lot more success.
Yeah, and once you've got that opinion and you are trading intraday, just understand what the pivots are telling you if you want to trade intraday.
Yes.
Because they'll either tell you to trade or not to trade, basically.
Yes, that is the question.
Inside those periods.
Yeah.
But you'll be in deep SH1T if you don't get out of here.
Yeah, I've got to get out of here. All right, guys. I will see you. I'll see you Monday. Have a great weekend.
Yeah, it's still Chinese New Year and US bank holiday, but London session will still be going, so we will be here.
We will, mate. We will. Have a good weekend, buddy.
All right, mate. You too. If you've got space, we might try and catch up on that.
Yes, Sunday night. I'll be around. I'll be around for sure.
Happy days. Right, mate. Catch you. I'm not going to hang around too long either, guys, because there's really nothing new to do. I think I've given you everything I needed to give you, and there are no updates. The yen, it appears to me, and we just spoke about Aussie yen, right? It appears to me that we are in a risk on market sentiment for now. You can see the Aussie there versus the yen, and I just said it, Aussie risk on, yen risk off. And I think you'll find that the yen across the board is probably falling, certainly against the dollar. I haven't got all the charts up, certainly against the CAD. So it appears we are in a risk on scenario. Take that on board and use it to your advantage, right? Tough to get into the market there, long euro yen, I'd say. And the same, well, Swiss yen, both risk off currencies. So that's a bit tougher, but use that to your advantage and see how you go. I'm going to have a look at euro dollar one more time to see if I can actually find a way in here, because that I was talking before about shots over the bow, and you know I really believe in them. One here that says, okay, up, big back, up, big back, up, big back, 3 in a row. There's nice market separation there to trade that long. But as I said before, I can't do that because my rule says I can't trade into the high of the day or low of the day without taking profit. But it would not surprise me if this breaks out of here, finds some acceleration, liquidity, and away she goes. I don't think I'm sharing my screen, right? Okay. Sorry, guys. All you can see is my big fat head. There we go. There, and there. So now you should be able to see my chart. There you go. Yeah, like I said before, there's liquidity here. I do believe that there's an acceleration point, but it may only be very, very brief because we've got the point today where price was not willing to go higher. And that's the key when you're trading intraday as well. I know DR1's up here, so there's plenty of room to take profit. There's all of that going on, and it wouldn't surprise me in the least if this just breaks out and goes to new highs. But if you've got rules, you've got to follow them, and that's one of my rules. What I would like to see, and if this does happen, then it's a whole different ball game. Let me go a little bit wider. If this does break this level and doesn't go where I'm suggesting it could go, and then comes back underneath here, that's a very strong signal that we're going to the downside. A very strong signal. Even a break and retest here may not be as good as it seems on paper, because as I said, there's liquidity here, right? There are stop losses here. There are buy orders here, just like I was planning to. And that's, you know, it's one of the keys to the strategy. If I'm buying here, so are a lot of people probably. It is the high of the day, so people will trade the break of the high of the day. But they'll also, if they're short, right? If they're short on this bar here, they probably move their stop loss down to there, above the swing. And what's a stop loss for a short, guys? It's a buy order, right? So there's going to be buy orders here. There's no doubt in my mind there's buy orders here. Whether they're strong enough to take it to the new high is another story. So yeah, that's kind of where I think, you know, that's where my mind goes when I'm in this sort of situation. Where are the big guys? Where are the stop losses? Where are the buy orders? And they're there. There's no question in my mind they're there. You've just got to get to that point. And if you enter here, then you're in danger of not getting to that level. So that's the problem you've got. So I stay out for that reason. Break and retests could be interesting, but as I said, if they do pick up what should be liquidity here and don't take out the highs, then there's something else going on. If there's something else going on, we're probably going to the downside. Interesting, isn't it? The way my mind works anyway. It's interesting. I can't find anything else for you guys. I really can't. The pound trade would have been good today. So if you got into that, happy days. Cad yen, new high coming up there, but I'm not really interested in it. I don't know why it's even on my chart. Why is it on my chart? Cad yen. No, got nothing. Pound looks to be weak. There's no question. Aussie yen we've spoken about. Aussie dollar, it's flirting around doing nothing, just about the entry to our trade. Look, I'd be stunned if this, well, no, I should never say that. I'll be surprised. I'll be surprised if the dollar rallies enough to take this out. I would be surprised. Stunned, no. Ash was talking about this earlier, and I think it's a very valid point. If you've got the idea that the Aussie is going to be strong for some time, then there's probably a reason to find an entry on a bigger time frame. At the moment, probably your stop loss on a bigger time frame needs to be there, I would have thought, at least there. I'm totally against getting in the market here, I've got to say, on a bigger picture, because you could suffer a big drawdown before you even get into profit. And that's kind of not where you want to be. There'll be another opportunity on a bigger time frame to get in here, because if this breaks out, it's going to come back to this level at some stage, that level there, right? That's where you want to pick it up, not here. So it becomes a far more attractive proposition. But if you're, hell bent that the Aussie's going to rally and go to parity or even 80 cents or wherever, then these are things that you probably need to consider. There's a whole lot of information on these charts that you actually don't see on the smaller time frames. A level as strong as that is really, really cool. A level as strong as this one is even cooler. As you can see, it couldn't get through here, not for minutes, not for days, but for a whole year. In fact, a whole year before it broke it. Came back and retested it and then it's gone again. So no matter what's happening from, an intraday level, once you see these big levels rejected or double pumped, you've got a very strong indication that it's going to go for a while. Just a thought. So yeah, I've got nothing new, really don't. All the orders that I've got in the market are still perfectly valid. This one I thought about. If this is Cad Swiss, right, and we've got an order short underneath this bar, but I'm really looking for a better entry. I'm not sure this is it. And as you would know, if you've been following me for a while, you would know that I look for a high test bar with a white body to trade short as a lower high. The problem I have here, and it's only a minor problem, is that the lower high for mine needs to be off here, not off here. So really what I want to see is price get up to here to a previous resistance level. Maybe that's it. Maybe that is the level I'm looking for. But we're actually not there, are we? So I either want to trade it off that level or that level. That bar, perfect, absolutely perfect. And because it's at the pivots, it does make it attractive. I absolutely see that. But I think it's also far riskier, and the reward capability is not as strong as it would be if you traded from there, because really the reward, your first take profit needs to be here, because you've got a support level, right? And it's been former resistance. So it's a pretty strong level, certainly in recency times. So, that's kind of where I'm at. Yes, I like the bar. Yes, I like it's at the pivots, but I want to see it up here. I really do. I'm happy to go below that level, which is where our entry is. No problem with that, because we do have a setup anyway. We've got those 3 black crows sitting there, strong indicator that we're going short, and we've got the pullback and double cross on the weekly pivot. I think I was mentioning all that before. Am I trying to talk myself into that? No, I'm not. I'm actually trying to give you an indication as to why I'm doing what I'm doing. And Dollar saying, look, this could do anything, frankly. But there is a thing in Singapore where they do not like their currency to be stronger than, maybe it's this level here, around about 130 against the dollar. But if you look at history, they don't like it too far below that level here. And that could spook a lot of people, because there could be intervention there. My theory is that there's a better level technically to me, and that's it there. So that's like, another couple of 100 pips away. And that's why I actually like that position that we've taken. Very strong downtrend, no question there. And we've had a nice retracement. So if a technical reading of a chart means anything, this should go short, in my humble opinion. We've got a false break. We've got a dominant break of a trade line. We've got a bear flag. It's all happening. So if I don't trade that, I shouldn't be trading, frankly. Simple as. Guys, I said I was not going to stay around, but here we go. I get carried away when I start looking at charts, because I like to talk about them. Guys, those of you who are Aussie risk off and yen risk off means Aussie buy and yen. Aussie is risk on, Roy. So whenever the market's got a sentiment of they want to take risk on board, and that happens from basically a fundamental reason, like they're happy that, and I'm not saying this is the fundamental reason, but things like, okay, we're happy with the vaccine. The vaccine's doing a good job. So everybody's in a buoyant mood. Let's go spend some money on currencies or the charts or whatever the case may be. Everyone's buoyant in a happy mood from a trading perspective. When that happens, you tend to find that the commodity currencies in particular, Aussie, Kiwi, CAD, they're all risk on currencies. So people tend to buy those in those times, or trade those, in risk off times. They tend to flee to the Swissy and the yen, and used to be the US dollar. that's kind of in a big question mark at this time. So if you deem that the market is in a risk on scenario, which is kind of where I'm at, I think it is, then you want to be looking at currencies like the Aussie, like the CAD, like the Kiwi versus the US dollar. And pardon me, if you then use the other side of the coin where you've got risk off currencies, risk on currencies, risk off currency, sorry, stop, go, green, sorry, stop, green, yeah, all that. When you've got risk on currencies like the Aussie, CAD, the Kiwi, versus risk off currencies like the Swissy and the yen, it becomes a fairly simple equation. If you deem that the market's risk on, you're going to trade things like Aussie yen long, CAD yen long, Kiwi yen long, or Swissy, take your pick, both risk off currencies. And when the market turns in the other direction, obviously you want to trade those the other way. As this point, it's a break and retest to further retrace to 130 or thing, you think, in the range zone. Well, we've already, let me go a little bit tighter and see if I can read your question. FAD. At this point, it's a break and retest to further retrace to 130. Okay, 130 is really not in the picture here as far as where I'm looking short term, which is first take profit, right? So first take profit is still at 132.15 because I want to get safe in the market before we hit that low. Because if we hit that low, there's going to be support here, right? So that there will be buying. I've got no doubt about that. It's a matter of where your stop loss is going to be at the time. So 130, that level there, pardon me, is a bonus for me. But to answer your question, I suppose, and the reason that you wanted me, or that you're asking the question is, this is a bonus. I think 132 is quite achievable. This one is a bonus. And, you know, if it really goes nuts, then who said we can't go down to here? So the potential reward is still there, in my humble opinion. There may be intervention at the 130 level. And that's, I think that's where I was going with that. There may be intervention by the Singapore government or banks or whoever makes those decisions. So, yeah, I think 130 is absolutely achievable. And what happens next is probably questionable, I would have thought. But from a technical point of view, let's have a quick look at that, eh? That's why I've got a TP level, because we've got a confluence area there. Okay. But yeah, I think 130 is definitely a possibility. As is anything, you know, there's no such thing as can't in currencies. All right, mate, happy days. I better get out of here or Angel's going to have me slit my throat because she's right in her overtime situation. Guys, have a wonderful Chinese New Year if you are participating in that. Enjoy your families. We'll catch up with you next week on Monday, and we will see you then. Have a wonderful weekend, guys. Bye-bye.